The pros and cons of selling subject-to with a wraparound mortgage. Selling a $1,249,000 single-family residence in Ventura County subject to the existing financing with a wraparound mortgage can be a powerful strategy, but it comes with trade-offs. Here's a breakdown of the pros and cons for a seller considering this move. 1. Attract more buyers. You open the door to investors and buyers who can't qualify traditionally but have solid down payments. Especially appealing in high-interest environments, your existing lower-rate loans becomes a selling point. 2. Get top dollar or better terms. Buyers may pay full asking price or more in exchange for favorable financing. You can negotiate terms, interest rate, and cash flow from the wrap note. 3. Cash flow opportunity. If you carry the wrap at a higher interest rate than your underlying loan, you create monthly spread income. Think of it like becoming the bank while still profiting on the difference. 4. Faster sale. Investors and problem solvers move quickly. No bank approval needed, fewer delays in escrow. 5. Help someone without bank approval. You create a win-win by helping a buyer locked out of conventional lending. 6. Possible capital gains deferral. Depending on how you structure it, this can potentially delay or reduce immediate capital gains tax exposure. The cons of selling subject-to with a wraparound mortgage. 1. Due on sale clause risk. The original lender can call the loan due when the property transfers title, even if payments stay current. This is a low probability, but a high consequence risk. 2. You remain on the hook for the loan. If the buyer defaults, your credit and financial reputation could be impacted. Requires trust in the buyer or escrow control for payments. 3. Requires legal and contract expertise. A poorly written wrap agreement can lead to legal exposure, disputes, or foreclosure messes. You need ironclad paperwork and professional guidance. 4. Disclosure requirements. California is a consumer-friendly, disclosure-heavy state. We must follow the Department of Real Estate and Financing disclosure laws carefully. Escrow and title hurdles. Not all title companies will handle wrap or subject-to transactions. You'll likely need a creative, real estate-friendly escrow agent. 6. Not for unsophisticated sellers. This strategy works well if you're comfortable with financial instruments and real estate contracts. It may not be ideal for a seller needing a clean break. This strategy is ideal if you don't need all your equity up front. You want to maximize sales price or monthly cash flow. You're open to alternative exits and working with a real estate investor or a non-traditional buyer. You have strong equity in a desirable first mortgage like 3 to 4% interest rate. Ready to take the next step? Now that you understand the power and pitfalls of subject-to with wraparound mortgage, the question is, do you want to master this strategy yourself, or would you rather have a pro handle it for you? Want to learn how to do it yourself, step by step? If you're ready to get trained in creative deal structures, build real equity with real estate, break free from traditional rules, go to makeyourmoneymultiply.com and start learning how to structure, negotiate, and close these deals like a pro. You'll get access to training, tools, and templates that make creative finance simple. Prefer to have a trusted expert handle it? If you want a licensed broker and consultant to guide or represent you, a deal done with total compliance and confidence, and a custom strategy tailored to your property and goals, go to greenmeadowinvestmentsllc.com and let's talk about getting this done right the first time. Whether you're selling a home in California or exploring investor-friendly exits, I'll help you execute it smoothly. Until we meet again, I'm Budrakey.